Earlier this year, we sailed across the Atlantic without full insurance because it was just too difficult and too expensive to get cover. Then, on reaching the Caribbean, we found our premium was several times the rate we were paying in the Med. At that stage, we changed insurers to a UK-based broker called Velos, and their broker Stefan agreed to talk to us on camera to try to explain the workings of marine insurance. The first thing we wanted his take on was the strange wording of many policies that says you are not insured if you go out of sight of your boat at anchor. If you leave your boat and you go out of sight of your boat, you're no longer insured. Now, a lot of people, most people don't know that, and they'll go happily ashore and
us, for instance,
go for a walk around. I know we never go outside of that boat ever.
We go walk around the island. We go off the night. You can't see the boat when it's dark.
No.
So how does that work?
So again, talking just for Global Yacht Cover, I did go and get this point clarified with them because I too have heard it as well from people. And basically, Global confirmed to me that under the policy wording, you are actually fully insured when you're at anchor, even if you don't have line of sight, as long as the anchorage is safe and secure.
So what is safe and secure? Well, it's all common sense, really. If you chose to anchor here, in a strong northeasterly giving you a lee shore, your insurance company, quite rightly, might take a dim view. Obviously, we would all anchor properly in a sheltered cala, but do beware, a forecast storm coming from the south is going to change the status of that anchorage. How strict are insurers about things like having a day marker up if you've got the anchor ball? If you failed to put your anchor ball up as a day marker, or if you failed to put your anchor light on at night and got hit, would insurers then sort of come out and say, well, you weren't obeying the rules, but you're not covered?
For a claim to be avoided for those reasons, the insurer would need to show that had a direct impact on the claim.
Sure. Mm-hmm.
So the rule of thumb is basically, if you have something in the policy that says, and I'm just going to be flippant here and say, warranted vessel painted pink for argument's sake, and you went on the rocks and that was all perfectly okay and it was coverable, and the insurer turned around and said, but you didn't paint your boat pink, and the warranty says you must be painted pink, I'm not paying the claim. That's not allowed. He has to pay the claim. I know there's a high court ruling saying that you can't use those sort of get outs to avoid claims.
Sure.
Now, coming back to claims, we had a friend, Ken, who lost his mast, sadly, in the middle of his Atlantic crossing.
Yeah.
It was an AML. He then went to a yard in Trinidad where we caught up with him. And what he did is he bought another AML that was in the yard but had a perfectly good mast, and he used that mast to fix his boat.
Yeah.
Is that a good idea? To actually go ahead and, if you like, sort out your own problems?
Because my first question to him, because we interviewed him, my first question was, well, you're insured, Ken. Why doesn't your insurance just pay for a new mast? And he said, well, the expense of that, would be outside the remit of what the insurance would pay. They would write off the boat.
It's $120,000, and if you're insured for so much, they'll only pay out so much. So if I would have gone the way of new masts, it's too expensive.
Yeah.
Yes, so this is the technical term of a prudent uninsured. So it stems back to where insurance started from, marine insurance particularly started from all those years ago, before the days of cable telegrams, let alone internet and satellite phones. When you were the owner of a ship, and or the captain of a ship, and you're in the middle of nowhere and something happens, well, what do? I can't get hold of my insurers. They're in London, or wherever they are. So basically, prudent uninsured is the principle that you act as if you have no insurance, and as long as you act prudently, then and the claim is recoverable under the policy, then you should be reimbursed accordingly.
So if your boat springs a leak on the weekend when you can't get hold of your broker, then do what's ever necessary to fix it. And if you think you need an emergency lift on a Sunday, then go ahead and do it. You're protecting your asset, which is good for you and your insurers.
When you insure a boat, it's not the same, is it, as insuring your house or a car?
No. In essence, the market is much smaller. There's a lot less competition, a lot less underwriters. And that's just if you're looking at it from a UK insurance point of view. the minute you, or UK or European insurance point of view, the minute you kind of go offshore and head out into the great blue yonder, the number of options start dropping off dramatically. In essence, every insurance company has to have a license to operate. And where they're licensed for will determine whether or not they can insure a risk. The determining factor is usually the flag of the vessel. It's not always. Some insurers use different criteria, but usually rule of thumb is the flag of the vessel. So if you've got a UK registered vessel, you should be able to insure yourself with UK insurers and people who are licensed to write business in the UK. Pre-Brexit, that meant that you could use European insurers were allowed to write UK business and UK insurers were allowed to write European business. Post-Brexit, barriers have come up. To the best of my knowledge, most European insurers won't touch UK flagged vessels or UK owned vessels.
So another thing that Brexit's messed up for us Brits, but we're constantly coming across Americans who are having great trouble getting insurance in Europe. A couple of years ago, we actually interviewed patrons of ours, Rob and Laurie, who had to go to great lengths to get insured.
Americans in the Med on a trimaran. That's virtually not insurable.
Wow.
Even Americans in the Med is very difficult to insure. You know, we call Pontaneous, we call Pantaneous, and we call many other companies.
Chubb.
No. Won't touch it.
And they won't do you?
No.
Really?
No.
Now, Pantaneous took us.
Okay.
Finally, but
We have to be British Virgin Island flagged. They preferred all British flags
Right.
because they're a British company.
we've got a company now set up in the British Virgin Islands. The only and they're used to this. They do this all the time. The only purpose of the company is to hold the boat so that we can get insurance on the boat.
And any payout will go to the company, so then the company needs to have a bank account, which will cost you more money.
Because of American and IRS and all those issues and
Liability.
But there may now be alternatives to that rather complex method.
You insure US flagged vessels
do.
and European. So how does that work?
So that we as Velos are brokers rather than an insurance company. So the rules for brokers are a little bit more fluid, should we say. So the insurer that we work with, the main insurer and the insurer that you guys are insured with is Global Yacht Cover, and they have licenses for US. So they are allowed to write US business. There is a but to that. They can't write US flagged vessels in US waters. So as long as the US client is not in America or the United States, then that's fine. They can do it. So again, it goes. I mean, a lot of European insurers, for example, will not touch US flagged vessels, and that's again predominantly down to licensing.
Yeah.
I mean, we are in a market at the moment where the number of options is limited, but 5 or 6 years ago there were a lot more options, and there was a lot more opportunity for people and for brokers to shop around. That just doesn't exist in this market.
Sure.
And I think one of the things that people do and inadvertently maybe do a disservice to themselves is they think they're back on dry land and there are hundreds of insurers for cars, hundreds of insurance for houses, and I'll go and speak to 5 brokers and I'll get 10 different quotes and then I can start working out which one works for me. The fact of the matter is that, I think as we said at the beginning, there's a handful of insurers who will write blue water cruisers. They probably couldn't even count them all on one hand. And you might go to 5 different brokers, but those 5 brokers are inevitably going to go to those same 2 or 3 insurers. And the insurer sees the same risk 2 or 3 times. And sometimes by the 4th or 5th time they see it, they go, oh, I can't be bothered with this anymore. I'm not quoting that now. That's
One of the oddities of marine insurance is they like to put you in a box, an area that you can cruise in. On our shakedown cruise before we left the UK, we cruised along the south coast of England. But when we wanted to go across to the Channel Islands, we had to talk to our insurer for another box and an extra payment. Now in the Caribbean, we have even more boxes to play with.
We said this year we were going to be in the Caribbean, and quite rightly you said as long as you're outside the hurricane zone, that's fine. But then there was some arbitrary how far west we could go or how far south we could go.
Yeah.
And that's outside the hurricane zone. So it wouldn't make any difference in terms of our risk to go to these places. And yet, if we wanted to extend to go, say, down to Panama, we'd have to pay extra to do that. Is that right? Because this
It depends
random
on,
distance.
it depends on the contract or on the policy wording. I mean, generally there is a Caribbean box, and again, I'm talking about this from a perspective of global yacht cover rather than all insurers. Every insurer is different, but as a rule of thumb, this should be roughly how it works for most people. So, in the policy, in the cruising range of the policy, global state that there is the Caribbean waters, and they give some coordinates, which for them is 9 to 19 degrees north, by 58 to 70 degrees west, excluding Venezuela. So in essence, you're allowed to do whatever you want within that box. Now, there is as you said quite rightly, further down the policy, there is subject to being below 12.07 degrees north during the windstorm season. So as long as you're within those, you're fine.
You will notice, though, this doesn't leave you a lot to play with during hurricane season. Basically, it's Trinidad and Tobago, Southern Grenada, Aruba, Bonaire, and Curacao. We made sure we were in Southern Grenada at the start of hurricane season, but actually Hurricane Beryl came in very close and we had to sail to Trinidad to be completely safe. We did then, however, go back inside the hurricane box to help out with the devastation caused by Hurricane Beryl. A stark reminder of what can happen if you do get caught by a hurricane. Are there insurers that insure to be in hurricane zone, or is it under certain circumstances, or what is the situation?
Most of the insurers, should we say, the A-rated, top-rated insurers in the UK, US markets, or sorry, European and US markets or North American markets, are avoiding or tend to avoid the hurricane zones and tend to exclude it. So we'll either allow you to stay there with an exclusion, or want you below a certain area, like the 12.07 degrees north that we've discussed. There are people out there that will do the cover. They aren't in the top tier in terms of financial strength and rating. That doesn't mean that they're not any good. I mean, the financial strength of the rating of an insurer is partly based on the country of domicility of the insurer. So, for example, if you've got a Caribbean-based insurer, Caribbean countries are not usually rated financially S&P rated above B. That insurer is never going to be above B. It doesn't matter how strong their balance sheet is, because they're based in that country, they can't exceed that country's rating. And it does become a little bit trickier for the customer then, because inevitably we're always told, use a top tier insurer, use a top tier insurer. Where do you draw the line? To the layman, it's very difficult to start looking through an insurance balance sheets and working out whether they're financially secure enough to pay out in the event of a claim. But you can get insurance if you're in the Caribbean, and the ones that you do see there are probably either have an exclusion, and therefore they're not covered for windstorm, or they're insured with other insurers that we've just been talking about. If you want to go outside of that box, there's, moving on to Panama or wherever is perfectly normal and acceptable. They will look at that, and they will add an additional premium to do that if they feel that it's needed. But again, it depends on where you're going, what you're doing. Are you going directly to Panama? Are you going to go via Colombia? How long is it going to take? There are a number of factors that add in. How long are you going to stay in Panama as well? I mean, I only found this out about 6 or 7 months ago, that Panama has a higher predisposition to lightning strikes for one reason or another. So that causes, whereby if you stayed in the Caribbean box, you wouldn't necessarily have that issue. So that has to be factored into the pricing and the quote and so on.
I see, yeah. Yes, no, it's true. I mean, we were thinking on one hand to go down to the San Blas now, which is just off Panama, but you're right. There's a lot of lightning, a lot of rain there at the moment. We're better off here. So those sort of climatic things come into it, but it seems to be that even going from Italy to Spain or something like that, you're up against these boxes all the time, which to us just seems odd.
I think it's a case of a historical way of doing things, shall we say, and people, underwriters, like humans, fall into habits, and this is the way I've been taught to do something, and this is the way it's always worked. And so, better the devil you know, and I'm going to stick to it. It's always worked for us. Traditionally, I mean, I remember asking a similar question when I started out too many years ago for me to care to remember, and being told by an underwriter, oh, that's because the further east you go, the higher the cost of repairs. And 20 years ago, he was probably right. But now, as you quite rightly pointed out, the cost of repairs in Turkey is probably a lot less than the cost of repairs in Spain.
Yes.
And also the facilities in the Eastern Med have got a lot better than they were maybe 20 years ago. So there is an argument that the industry needs to maybe revisit the way they rate Mediterranean cruising. And I'm probably going to get told off by underwriters for saying that after this.
I mean, I can understand that it becomes very difficult because it's ever changing, and you're right, it can be small regions, which is probably why underwriters have tried to split it up into small regions in the first place.
You are going to be only in the West Med. It makes sense to limit your cruising range to 15 or 20 degrees, depending as to where you're going to be, because that would result in a cheaper premium.
The biggest insurance headache we've had was crossing the Atlantic. We couldn't actually get affordable insurance with just the two of us on board.
Now, when it comes to the ocean crossing, suddenly our premium went up massively. So there are two parts to that. One is the actual crossing itself. And secondly is once we got to the Caribbean and we thought, oh, well, that's okay now. We're just going to be sailing in the Caribbean. Our price will come down again. And that didn't happen. So why is it so expensive once, in our case, you leave the Med?
If we split that question into two, the Atlantic crossing and then the Caribbean. So with the Atlantic crossing, basically the risk for insurers is that you are out in the middle of the Atlantic Ocean. And should something go wrong, there isn't a plan B. So what might start off as a relatively minor, rudder failure or something like that in coastal waters is relatively quickly fixable and salvageable, suddenly becomes a much bigger issue, and could potentially result in the vessel becoming a total loss. So the risk to insurers is much higher in terms of an Atlantic crossing, which is why the cost goes up. Now, in terms of the Caribbean, the reasoning that I've been given for that is that there are a number of reasons. It's not one. Number of vessels in the Caribbean tends to be quite higher or more concentrated than in the Med, although the number of vessels are increasing in the Med. That does lead to a higher risk of collision. The yards in the Caribbean are many and far apart. They're mostly on small islands, which means it's very difficult to get parts to. Costs of parts goes up, higher taxes, higher costs of getting surveyors out, and so on. And all of these basically add to the cost of the claim, which therefore results in a higher premium. I think one thing people have to remember is that insurers are businesses at the end of the day. They need to make money in order to continue operating. And at a very basic level, that means they need to be collecting more premium than they're paying out in claims. So for many years, they have been making losses, and I think everybody will appreciate over the last 5 years, premiums have gone steadily up year by year. So there was partly a correction going on in the market so that the insurers could get to a sustainable level. But you've also got to remember insurance is about pooling resources, the resources of many to pay for the few, which is obviously the claims. But yacht insurers are part of a bigger ecosystem, which is basically the marine insurance market. And there is events that may have absolutely and regularly do have absolutely nothing to do with yachts impact the market. So if there's a big fire in a yard, if a cruise ship goes down, I mean, if we see vessels under attack by the Houthis in the Red Sea. I mean, one of my colleagues, we paid out on a $40 million a total loss on our war cover. That impacts, that's a marine insurer at the end of the day. That guy may have nothing to do with yachts, but is all the same pot. So,
isn't that part of the problem then? Because going to a broker, the advantage of that is that you get to know us. And isn't there something to be said for that relationship getting to the point whereby you say, well, we know that, say, you're liveaboard, that you take care of your home, that you maintain your boat, and therefore your premium could come down. That would be the case in a car, for instance, where you get a no claims bonus. Isn't there an argument for actually some style of yachting, and in our case being liveaboards, should be seen separately from a massive cruise liner in a war zone?
Yes, and they are. I think insurance for vessels that are kept in coastal waters tends to be more, dare I say it these days, kind of automated, and it's all rating matrices going on in the background. A lot of people buy insurance off portals these days, and that's very much a formula-based scenario. And the system doesn't necessarily take into account the experience and liveaboard and stuff like that. In your scenario, I can't speak for all insurers. Again, I can only speak for Global Yacht Cover, who we do place most of our business with. The underwriters there, have boats. They understand boating. They understand liveaboards are traditionally a better risk, and they do take that into account in their underwriting. And those factors are reflected in the premiums and the deductibles that they give. I'm sure other underwriters take a similar attitude or a similar perspective, but I can't necessarily speak for them.
It seems to me that the industry as a whole needs to have a really good grasp. I know it's very difficult to do, of all the different risks that are around. From one thing that you said before, oh, Caribbean, there's more boats. Well, there might be more numbers, but if you sail in the Caribbean, you'll know that the anchorage aren't as packed as the ones in the Med, for instance. And the place that we've sailed that's had the most boats that you might collide with by far is the Solent. I mean, that place is packed with boats. It really is. And our insurance in the Solent was a quarter of what it is here. So, I know there's other factors.
The cost of repairs.
Yes, that as well. I mean,
17 yards.
To be honest, if we had a major fault with this boat, and I thought, okay, we're going to be on the hard for 6 months and doing a load of structural work or whatever, where would I want to be? Would I want to be somewhere in a port off the Solent? Would I want to be in the Med, or would I want to be in the Caribbean? Actually, I'd probably want to be in the Med or the Caribbean. If I was in the Med, I'd probably want to be in Turkey, although I think the prices have gone up there, so maybe not, maybe Greece or somewhere else. If I was in the Caribbean, I'd want to be in Trinidad, because I know you get good work and good prices for things there. I mean, I can understand what you're saying about, yes, to get spares in. So for certain things, if I was having an engine repair, then getting Yanmar parts in might be more expensive. But if you were rebuilding a deck, say, then having the labour and the work, the workers to do that, it would be a quarter of the price in Trinidad than it would be to do in Southampton, say. So,
but I mean, when you're writing or underwriting an insurance policy as an underwriter, you can't turn around you could, but you'd never write very much business. Say that, I can give this rate for this sort of repair, or that rate for that sort of repair. Yeah. You've got to take it at a very high level. And the problem with the industry, and this is generally the insurance industry as a whole, not just the marine industry, is that, underwriters are ruled by actuaries. And the actuaries look at the results, and the actuaries make projections, and the actuaries sort of say, we project claims are going to come in at this level, and therefore we need, to make sure we've got this much premium in the pot to cover them, which means your rating guide is coming in too low. You need to increase your rates. And gone are the days, unfortunately, where the underwriter was allowed to make his own decisions and sink or swim by his own results. These days, everything is done by committee, and and I think that's probably just the world we live in these days, unfortunately.
Yeah.
So, whilst on the one hand, underwriters do try to tailor make policies and make them as sort of tailor made for the client as they can, they are also answering to a higher level within their organization, and that tends to be the actuaries.
Yeah, and we know, I mean, all we'd say to that is, we know it's sort of got to be a tick box type thing, and you normally have, because you always get asked that question, are you a member of a yacht club? And tick box, and if you are, then the premium comes down. Never really understood that, why being a member of a yacht club brings your premium down. What we would like is to have a tick box that says, do you live aboard your boat? And if that's ticked, then the premium does come down, because I think, if you've got the relationship with the broker as we have, that sort of happens, but it should be, I think, something that's on the list straight away, because there's more liveaboards now, and we do look after our boats. So
absolutely, it's your home at the end of the day, and it doesn't serve you or anybody if you don't look after it properly.
Thank you very much.
Thank you
for talking to us, because it's not, I'll be honest with you, it's not always easy to get insurers to talk to you about the back end of their business, and it's been really, really helpful.